looking at the Euro USD 1 hour chart and just doing a quick um, look at the levels and a little bit of a review on the 21 EMA on the 1 hour chart. So today's Friday, and it's the close of the trading week. So most of the week started off and moved sideways, then dropped down, moved back up um, to test a trend line. Those 2 points connected through, and then traded above it, and then broke back down below it, and moved past this support level around 132.976, and further down it has dropped almost down to the support level 132.050. So now there was a impulsive move down from 134.50 with a retrace back up to 134.068, something like that, which terminated around the 61.8 Fibonacci retracement. Then price came down back below the 21 EMA and broke through the 132.976 EMA. And when price came down to the 132.976, there was suggestions that this level was not going to hold. First you had a move down, then price went back up and retraced to the 61.8 level where it held. So we could see some strength at 618, which is the 133.92 price. And price came back below the 21 EMA. And when it bounced off twice, came up to the 61.8, came down a bit, bounced back up to the 61.8. When it came back below, which is from this point, all of this, it looked bearish. There was no suggestion that price was going to, the buyers were coming in and defending price to the upside. So I could see that came down, down here to this support and rallied back up, but it was a false rally because this needed to take out this level here, and it didn't even get to that level. Even if I wanted to move that level down to on the 61.8, it just didn't break the 61.8 level. So it's better if I leave this up here, show never got up to that, show that the 61.8 level held, and then come back below the 21. And yes, over here it showed that it never touched the 132.976, and that maybe that was going to hold and price slowly went up, but that would have been that is a signal to say look for long trades, and the entry would have been if and when price breaks to the other side of the 21 EMA, and it did not. It did not. So that suggests that the price levels were heavily defended by sellers. They liked that price and they just kept moving price further down. Now the the prices come in and looks like now it's putting in a first bottom here, put in a second bottom here, and a third bottom here, and it's still below the 21 EMA. So like I said over here, the 21 EMA is suggesting price is still to the downside, but the slope of the 21 EMA is different from what it was over here. It was more sharp, suggesting still further down, whereas over here it's flattened out. And then on top of that, I could come in and draw in a Fibonacci extension. This was a 618 retrace of this leg. So now I can, the Fibonacci 1618 extension is a little bit more reliable. So I'll just take this off and draw it in. So I go from the top down to the bottom and all the way back up to the top, and we can see that it extends 127, 1414, 1618. And where does it extend to? We can see price moving. If it gets down to that level, that'd be a good area to possibly taking a long trade. So the I had this red line here at 132.050, which going further back, we can see that this is an area that buyers like. They find this area to be very attractive, and they've moved in twice and moved price up off of it. There's one and there's a second, each time doing about 200 pips, 197, 198 pips, and this one is well over that. So will it hold one more time? So I wouldn't I wouldn't right now. I may not take a blind. This is the 1 hour chart. A Not a blind, but an entry right now off of this blue line. But I would more likely if it could reach down to 132.029, which is the red line, the support. We've seen it back here, and also the 1618 extension. If price could get down to that, then that would be a nice place to maybe take along, even though we're below the 21 EMA. These stops would go below that red line, which is at 131.835, or see, so that gives me 22 pip stop. That's a nice, and then you could go back up. If you do that, you could target 38, and that would give a 22, 25 pip stop, and a 3-to-1 risk reward. So now if it doesn't get down to the 1618 extension, and then it breaks up above the 21 EMA next week, potentially watch for some kind of action like that, bouncing off of that line, and take long trades. Now, uh, the thing is, it could break through both these red lines, the 1618, and go down further, and that would be, you look down at the 8-hour chart, which gives me a wider range. You can see the 132.050 is strong. The 131.835 is strong. If it breaks through that, you definitely don't want to be in this trade. It'll be a good stop, because then you're looking at maybe it dropping down further to below that level, which is around 129. So, one final thing I just wanted to look at. See, so this 21 EMA, you see, it's suggesting here, the price is to the downside. Now, because it's got a nice slope, it's sloping downwards, almost like a trend line. You could draw a straight line with that, and it's like that. Whereas over here, it's more like a horizontal line. It's a little more flat. So, of course, in an area like this over here, it's going to um, flip on either side of it. See over here, flat line, over here, flat line. And so what happens in the flat line? Above it, below it, above it, below it, above it, below it, and so on. So I like this slope right now over here, but now it looks like this is flattening out. We'll see how this interim structure support holds. Wait maybe for the end of the hour. And this just works again here, flat line. Um, However, this was to the upside, flat line, and it didn't really come back and break below. So you can put in your levels like that, watch the interaction of the line, and even if you take in trades above it here and here, your stops will go below this line, and would have been very safe there. Um, Again, this is the kind of action that I was just talking about here. You can have this down, it's flattening out. You have a good angle here. It's moving down, but then it's not breaking this. So you're looking at something like that. Now this would have been this trade potentially could have been a losing trade. Yes, that would have been a losing trade because stops would definitely have to go below the blue line. And but this behavior here, where it comes down, double bottom, triple bottom, look for an angle like that, which is what I'm thinking maybe here. If it gets above the 21 EMA. Now, over here it did get above the 21 EMA, so my entry would have been around here, and stops would have gone below the blue line, and then I'd be looking for something like below that. That'd be 30, 34, and then you target back up here 54, 34, 1 to 1 right here. So if you get to a 1 to 1, you should tighten up your stops. I mean, that could have been moved to break even. So could have been a break even trade. Um, I think that once you have a ratio, if you get in a trade and you come down here and you say, okay, my stop's gonna be 35 and I'm targeting back up to this area here of resistance, again 35. If you get to 1 to 1 and you think it's gonna go higher, then you gotta bring your stops up. Even if you bring your stops up below this or below this or below the 21 EMA, you could have got out for some for for a little bit of money there. Even if you see something like this, you say I'm at 34, and you could either close part of it or none of it. But if you do none of it, then protect your capital and go below this structure here. And you say if this structure gets broken, then chances are it's going back further down, at least to break even. So 21 EMA and the lines can be very good. Here's another example of getting on one side of the 21 EMA and staying on it. So if you see this coming down, you say, okay, bottom 1, bottom 2, bottom 3, break above it, take long trades anywhere. Stops would go below here and never ever threaten, ever threatened. So you could say again, get on the other side, so which is up here, and you target back up to the top. That's 116, but first of all down here just below it to the red line, you're looking about a 40 to 50 pip stop. Target right up back here. Look at that, 40 pips. You could get 1 to 1 ratio, and then you move it up to break even, and you never get hit. And you target 61.8. um, and boom, you would have got it on one bar. So the point is that I'm trying to say is a 21 EMA, red with double tops, red with double bottoms, triple bottoms, red with identifying support and resistance lines, red lines, can help you get into better probability trades. Ones like you see this coming down, you don't take a long here. You see this, maybe you take a long on the second one, maybe you take a long on the third one, but you definitely take a long as price is moving above this, and you say, I don't know. Price could just come up here, tap this range, tap this level, and shoot back down. And that is why I need to trade with a stop, because if I'm right, I can make money and I could go up and I'm getting 50 plus pips, extension over 100 pips. Or if I'm wrong, then I'm losing. And the thing is, I don't know if I'm going to be right or if I'm going to be wrong. And that's why I have to take trades. I have to take a chance. But it's calculated chances. It's calculated risk. It's setting in limits and stops and saying, I like the probability that price is going to move up once it gets above the 21 EMA because it's coming and put in a triple bottom here at key support levels. And if it comes above it, then it's telling me that hey, this is a defended area. These guys are picking up long contracts. They're looking to move price higher so they could sell those long contracts and make money. And so I could take a ride with them. Now, if they fake me out, then they just move price up here, and then this thing, when it closes, um, on a bar like this, you can't wait for it to close. If you see one, two, three, four bottoms, and then breaking above structure and 21 EMA, you got to get in and go for the ride. And if you're wrong, you set your stop below and you just get out. And it doesn't matter to me, it should not matter to me if comes up here, picks me up, come down here, stops me out, and then takes off. Because here's an example of when it doesn't do that. And if you have winners and you have enough of these and you have a good ratio, they're going to take care and you're going to come out ahead. Just keep trading. Don't overtrade, but keep trading. Know your setups and just trade them. And again, you can see the line is flattening out here. You could do almost it's just you're not getting an angle on the 21 EMA like this. When you get that angle, then you can say, I will take a trade off of the 21 EMA. And you can take a trade off the 21 EMA right here because of this angle. And and you come back down and you're looking at 70 plus pips. And your stop would not go up here in this particular case. Your stop would be, you know what, if I see this thing starting to get back to something like this, gets on the other side, I get out. I could set in my stops. I could take small losses and save my capital and trade for another day. Um, Here again, here's another one moving down. Got an angle on the thing, and so you say, okay, as soon as this thing gets on the other side, I'm gonna go long. It closes on the other side, boom, and you say, I'm gonna go long. You put your stops down here, and it doesn't get hit. Now you might say, well, no, I don't want to go long just on the first time it gets on the other side. You could say, I'm going to get long when it breaks some structure. So boom, it breaks some structure. You get in anywhere here, or I get in anywhere here to go long because I'm going to do something like this. I'm going to put this line A, B, extend it up a little bit like that, and I can see the line being ridden all the way up. And see how this is my first defense. My last defense, if I'm wrong, my stops are down here. Boom. And you take your chances and you trade. Same thing here. You look for this stuff to get broken, and you see, okay, this gets broken, price comes back down, but 21 holds. It gets back above the 21. Nice pin bar here. Become. You see, look at this action. I gotta come up with a name for this. Um, but it's resistance structure left to right, trend line support top, bottom to top, going left to right, and it holds. And there was lots of pips to be gained here, you know, 98 plus pips, and you can trade like this, and so on. So this is see, we are the hour close, and this is still down. This is see, this did not close above the 21 EMA, but if it does get down to the 1618, then I'm liking this. I'm liking this a lot. We'll see how this plays out.